Hello investor, how are you? Hopefully you're having a wonderful time. In today's video, I'm going to cover the T-Mobile. This is the ticker name is TMUS, and this is the video for the stock valuation requested by one of the YouTuber. His name is Vicky Chan. Thank you, Vicky, for suggesting this video. Myself, Pramod Kumar. I am a CFA charter holder and FRM certified. So in this video, what we'll do basically will, as you can see, I'll first compare with this with AT&T, pretty high level comparisons where those market cap and other factor this stand, and then I'll go deep into the go to the valuation metrics, see how the company margins, and then compute the model and do the estimated IRR. I do find this company has a good amount of debt, which I will show you in the model valuation. So make sure you have checked that piece as well. Okay, so let's see if I compare this. Let's get started. If I compare this AT&T, which right, this is the ticker name T, and then this is our ticker which I'm analyzing this today. In my video archive, if you can already see the deep dive stock valuation of AT&T stock and the separate Verizon as well, right? These are all the key player in the communication sector in US, as you can see. If I see rank them from the market cap perspective, we can easily see the Verizon right now is number one, right? Because it has a 250 billion in terms of the market cap, and the number two is AT&T, and then the third number it comes to T-Mobile US. If you see just from comparing it T-Mobile, we can easily see, okay, this is quite expensive, right? It's 46 times of its earning right now, right? As compared to its peer, that is only 19. And look at the Verizon stock right now, it's so cheap, right? Right, is only 13 times, less than even 15 times of its earning. So if you see from that perspective, looks like the Verizon is a good investment, right? Just from here. And let's continue our comparison, and then we'll go deep into that. Okay, because it's also good, I find, to see where we stand in terms of this comparison as well, right? I think this screen is a lot of data, so okay. So if you see from this another, so this is the continue our comparison. The T is the dividend paying stock, right? It pays the 7.7% dividend, right? So this is the highest. But whereas the T-Mobile, which we are analyzing today, it's not paying any dividend, right? And also on the Verizon, is also paying a dividend, is 4.15%, right? So that's, you can see from the return perspective, right? ROE, return on equity, the Verizon stock is the highest, and these two are nowhere near there, right? It's giving 29, almost 30% returns, right? From the liquidity perspective, I think these are good. Basically, it won, and but let's see from the gross margin and operating profit and the profit margin perspective how these three stands. Pretty much I find the T-Mobile and the Verizon is quite similar, right? It's giving gross percentage. But if I see from the profit margin perspective, look at here, how good is the Verizon? Sorry, I don't want to basically say that Verizon is good or T-Mobile is the best. Before we going deep jump down, I just thought why not we just do a comparison as well, right? On this stock as well. So this is a 5.10. You see the margin is lower, whereas this one is quite high, at least from this data points. Okay, so now we have compared this high level. So now let's go deeper into the financial of T-Mobile, because we know T-Mobile is invested by, there is a huge investment recently happened with Mr. Warren Buffett. He invested that. If you don't, I just recently did a video on that one to show his portfolio. Feel free to check out on the channel. So not only in that video I'll cover the Mr. Buffett, but also Charlie Munger, Michael Burry and two other portfolio. Okay, so hopefully this gave us a very good understanding how the company is as comparative to others, right? Okay, so let's get started. And I appreciate if you can kindly give a thumbs up to this video. It really motivates me and to make this kind of video. Okay, so let me put myself hide now. Okay, so this is from their the 10K, right? So they're claiming that okay, they are the bigger, and I also verified this from the cnet.com website. Yeah, they are the largest and the nationwide network. Let me know in the comments if you don't think that what's the company claiming that, and they're saying this is a better signal, this is the farthest. So basically they are claiming they are the longest one. Maybe they are not the fastest, but at least they are the longest, right? One, right? So that's what they are claiming here. The next thing, okay, let's go into the company as per the 2019 from the service revenue perspective, the 69% of the revenue coming from the postpaid, which is good, right? And prepaid is only 28%, so which is pretty much 2/3, if we can say. This is so when somebody says postpaid, it means it's a guaranteed, right? So at least we assume at least they're covered for a year, right? Covered. These are the longer term contracts, right? So at least for a year, right? Where a prepaid are not that. From the network coverage perspective, yeah, they say they have a nationwide more 200 million people they are covering as per December 2019. Okay, and 4LT is 327. Okay, so that's what it is here. Okay, so from this is just from directly from their financials. So what they are saying, they are the third largest postpaid, right? So they are the number 3 player. So we also need to understand before we go into the financials how this company is overall, right? Rather than just see, okay, this is my return, and no, because my perspective is I totally believe the philosophy of Mr. Munger or Mr. Buffett, that we need to understand the business, at least try to understand, right? Even if we go outside and buy some furniture or something, we do a lot of discussion on that. But I believe the same thing when this is our investment and we are not just changing every day, right? So it's for the longer term perspective. Okay, so he's the number 3, as if they are saying as per the postpaid revenue. The second largest. Okay, our main competitor, they say, is AT&T and Verizon Mobile, and right, AT&T, Verizon are the significantly larger player. You look at the significant larger, right? Larger player enjoying the greater scale, resources and greater scales, right? So this thing you need to be. So, but still they are not. They have full 53,000 full-time employees, right? Okay, now let's go straight to the financials. Okay, to see where the company stands from the valuation matrix perspective, right? As we can already see, the company is quite expensive, right? And from the book value perspective is 2.4. But the good thing is company is earning, right? This not like they are not earning. So if you buy the company shares, for each share you will get $3.06. Okay, now here is the very important slide. If you see from this slide is, okay, from their liquidity or short-term perspective, this everything is below 1, which is at least from here, right? So this means if their expenditure is their expense is $1, all right, they only have 74 cents dollar amount, right, to cover that. So that's what you can read here, right? Maximum. And that also they have in current assets. So this is not that great. I hope they can bring it to 1 or higher. That will be better. So that's not great. Okay, but still not bad. At least it's over 70%. From the gross profit margin perspective, okay, looks good, pretty consistent. Let's see from the bottom line. Bottom line perspective was, if I compare it honestly from 2016, they did a very good job, right? They did double it, right? Double it. You see from 4 to 8%. But one thing I don't like about it is look at the deviation, right? 4 to 11 and then 7. And seems like now they are coming up to 8 and so on, right? So I hope to see more like a consistent figure. It will be better. Only consistency when I did the Costco stocks. Honestly, I never see such kind of consistency anywhere. Every year is same. And and I think they still have some time for their $10 dividends. So if you want to gain that $10 dividend, feel free to buy. Sorry about that. I'm just buy that stock. Okay, let's continue. Okay, so how overall the company reported as per the market expectations? That's also very important, right? Because that give positive sentiments to the market. That's what at least I believe, and I try to make the things diluted, and the way I put some opinion, I'll try to put some evidence, right, rather than things in the air. Because if you are just talking, whether this is 10x or 20x, just to pump up the video, but overall we need to whether it's a fact or this is an opinion, right? So as an investor, I think we need to be very careful for that, right? From how the things are coming. So these are the facts, right? We are seeing. So because if I don't see the data, if I don't see this fact, how can my hard-earned money? I'm not sure about other investors there, but I'm not that rich to just have so much money in my back pocket to invest in each and every stock. For sure, we need to move around the money, but wherever we invest, we assume it should be safe and good for the long-term perspective, right? So we don't have to touch that. So it's very important to see how the market is treating. So if I see from the analyst estimate, right, is dark blue and the reported one. The good thing is always is higher, right? Look at this one is way higher and this is way higher. So it seems like if this is doing a great job, so if it goes even higher here, so I think the stock will shoot up. So look at the surprise, 129 times 454. So it seems like the analysts are not properly able to predict the earning correctly there. Okay, let's get started. Okay, now let's go to the models. I think that's what people are waiting for. So okay, so if I'll go here, I know. Okay, so I'll open a spreadsheet and then I also need to close myself. Okay, so this one, what I'm doing here. So again, this is the current price right now. And if you can see the price, so I have taken this 5 year of the average growth, which is coming as 58.91% free cash flow. The company is doing a very good job in generating the free cash flow, and then I am actually reducing it to half, right? That's pretty much the pattern I do it. So that's also very conservative, right? That shredding the growth rate every year and year, right? So like almost 30% I have dropped while I try to project my growth rate for 2030. And then I assume I'll sell this company in 10 years at 15 times of the free cash flow, which is pretty good. And one thing to highlight here is that I already have, this is 1.24 billion shares outstanding as per now, and the cash per share is only $1.23, right? But the debt per share is almost $76 per share, right? And the free cash flow is 0.80 cents per share. So pretty much most of the money you invest, it goes to paying off the debt. Looks like you're buying the debt. But good thing is the company has phenomenal amount of the free cash flow growth rate, and plus it's and also it's a 5G. And I find this is honestly this trend in the AT&T and more in AT&T, and then some in Verizon as well, but not that good, that much. So feel free to check out that video as well if you want to see. So if I do the math, as you might be already aware since you are watching my video, hopefully I project for 2030 my price and then discount it by the rate of 10%, because I assume I need at least 10% return if I invest in one stock. So this is my 2030 price, 410 and 72 cents, and this is my today's price, $154.72. If I compare it with the current price, looks like the price is on discount right now, right? So it's not fully there. So there's a room for the stocks to go up. Okay, so let's see how the estimated IRR based on the different entry points, what's the return we will be getting. Okay, so since so far, if you haven't if you're new to the channel, feel free to subscribe and also give a thumbs up. I really appreciate that. Okay, so that's what I think Mr. Vicky Chan is also waiting for. Yeah, here you go. So if you enter the right now, you'll get the 15.31% of return, right? And then if you enter wait and price goes up, maybe 150, then you get 13.52%. But if the price drop, market crash or 100 or so, and you get a better price, you see always the price is the good entry point, right? You get almost 19% returns. So yeah, that's from the estimate perspective. Oh yeah, last thing but not the least, happy Thanksgiving for our US YouTube members, and please subscribe to the channel, smash that like buttons to beat the Google algorithm, and comment it which one, is it your favorite stock or T or VZ or any other, right? Let's share. And if you want me to cover any of your video, feel free. So I'll try to put in my list and make the video as soon as possible. Thanks for watching, and happy investing. Bye for now.